Welcome to the 5-Minute Prime Podcast. Quick, actionable tips to master personal finance and real estate investing. In just 5 minutes a day, we'll help you build wealth and achieve financial freedom. Hey, Prime investors, Martin Maxwell here, and welcome back to the 5-Minute Prime Podcast. This is episode 57. All right, let's have a real chat, just us. Forget the crazy headlines for a minute. What's really going on with the market as we hit the halfway point of 2025? I know what many of you are feeling because I'm seeing it too. One day you're hearing about stubborn interest rates and a wall of debt that sounds like a catastrophe is just around the corner. The next day you hear someone talking about a once-in-a-generation buying opportunity. It's enough to give you whiplash. So is it time to be fearful or is it time to be strategic? Today, we're going to cut through all that noise. I've been digging deep into the data and synthesizing what I'm seeing to give you my take, a clear, actionable playbook for the rest of the year. Let's figure this out together. First up, let's talk about the most powerful, undeniable force in our business, demand. And real estate demand at its core simply follows people. It's a principle that successful investors have built empires on, this idea that you have to follow where the jobs and people are going. The data continues to tell a clear story. The latest full-year U-Haul Growth Index still shows a powerful trend of people moving to states like Texas, Florida, the Carolinas, and Tennessee. And when we zoom in, we see cities like Charlotte, Raleigh, Dallas, and Knoxville popping up again and again as major destinations. Now, this isn't about chasing the hot market of the month, a trap we warned about back in episode 46. This is about understanding a durable, multi-year demographic shift. People are actively leaving high-cost areas for better affordability and quality of life. The exact dilemma we broke down in episode 49. So for me, the first part of our strategy is clear. Your research, your attention, your focus should be on these migration magnets. That's where the sustainable demand is heading. All right, let's tackle the headache in the room, the money maze of interest rates and inflation. As of mid-June 2025, 30-year fixed mortgage rates are still hanging out just under that challenging 7% mark. And the Fed's own projections see inflation ending 2025 around 2.2%. Better, but still above their target. My take? This higher for longer environment isn't a temporary storm. It's the new climate we have to learn to operate in. So how do we do that? This is where the hard asset philosophy becomes really important. The idea is that in an inflationary world, tangible assets that produce income, like a well-chosen rental property, are one of the best places to protect and grow your wealth. For us, that means two things. First, cash flow is no longer just king. It's your entire fortress. Your deals must work with today's numbers. Second, it reinforces the need for the creative financing strategies we explored in episode 52. You should be actively looking for deals with seller financing, considering partnerships to pool capital and reduce risk, or looking for properties with assumable low-interest loans. This market rewards creativity, not just capital. Now for my favorite part. This is where the challenges we just talked about create what I believe is a truly phenomenal opportunity. You've probably heard about the wall of maturing debt in commercial real estate. And we're talking about nearly $1 trillion in loans coming due this year and next. The problem is many property owners who bought at peak valuations with cheap debt simply can't refinance at today's higher rates. This is creating what I call a motivation spike. It's exactly the kind of situation that sharp investors get excited about, looking to buy from panicked sellers, operators who are over-leveraged and now forced to sell good assets at a discount. This is your hunting ground. Your job is to find the value in the panic, but it requires precision. The opportunity isn't everywhere. It's in specific older properties or in assets with mismanaged operations where you can add value. This means your deal analysis, a skill we sharpen in episode 21, has to be razor sharp. You need to be able to sift through the noise on platforms like LoopNet to find the real gems. The headlines might scream danger, but for a prepared investor, that's just another word for sale. This kind of shift in the traditional market is exactly why savvy investors start looking at other tools in their tool belt. The more you know, the more opportunities you see. So let's think outside the single family or multifamily box for a minute and talk about a few alternative real estate plays that are worth having on your radar right now. First up, self-storage units. Think about it. During any economic shift, people downsizing, moving, or businesses adjusting, the demand for storage remains incredibly resilient. As an investment, these can have lower maintenance and management costs compared to residential properties, offering a steady, reliable income stream. Second, mobile home parks. Don't overlook these. With the nationwide focus on affordable housing, mobile home parks are in high demand. The beauty here is that you own the land and lease the lots. The tenants own their homes, which means they handle their own maintenance, and because it costs thousands of dollars to move a mobile home, turnover is typically very low. It's a powerful cash flow play. Third, something completely different, billboards. This is a fascinating niche. You're not managing tenants, you're leasing space to advertisers. It's a low-maintenance, passive income play that's all about securing a great location on a high-traffic road. And one more for the financially minded real estate notes. This is where you essentially become the bank. You can buy existing mortgage debt, often at a discount, and collect the payments. It requires a different skill set, but it completely removes the hassles of property management. The goal here isn't to become an expert in all of these overnight. It's about expanding your awareness. The more tools you have in your investing tool belt, the better equipped you are to see and seize the unique opportunities this market is creating. Okay, let's bring it all together. Here is my recommended playbook for you, the Savvy Prime Investor for the second half of this year. First, fortify your finances with cash flow. I cannot say this enough. Do not gamble on appreciation. Every deal you analyze must produce positive income from day one. Second, become a hunter of specific distress. Don't just browse. Actively look for the signals on properties with high vacancy, deferred maintenance, or that have been on the market for an unusually long time. These are the sellers who might be feeling the pressure. Third, look at adding other tools in your tool belt. The more you know, the more opportunities you see. So what's my final take on the 2025 market? It's a tale of two realities. The headwinds of high rates and economic uncertainty are absolutely real, but those very headwinds are creating specific targeted opportunities for investors who are prepared, focused, and strategic. This is not the market for casual participation. It's the market for serious, educated investors. Don't let the noise paralyze you. Let it focus you. Now your challenge today. Take one concrete action step this week, just one. Either go to the U.S. Census Bureau's website and look at the county-to-county migration flow data for a state you're interested in, or start learning about one of those alternative assets we talked about. Just one. The goal is to move from passive listening to active searching. Thanks for tuning in to episode 57. I'm Martin Maxwell. Keep learning, stay strategic, and keep building one smart move at a time.